What if a business, a totally successful business, is completely missing its most valuable customer? Today we're digging into a fascinating proposal for a hotel that thinks it's serving tourists but might actually be sitting on a gold mine. And it all starts with one really simple but powerful question.
Right. I mean, what if the key to unlocking a hotel's true potential has nothing to do with getting more vacationers in the door, but is all about serving a totally different kind of overlooked market? Let's dive into a proposal that explores exactly that.
Okay, so our case study zeroes in on the Quality Inn & Suites in Sharonville, Ohio. Now, this is a perfectly good, well-maintained hotel, and it's in a killer location, a major industrial corridor home to absolute giants like Ford and GA Aviation. By all accounts, it's doing just fine.
But, and this is the big but, here's the twist. The whole argument of this proposal is that despite its success, it's caught up in a market inefficiency. It's a classic case of a good business that could, just maybe, be a great one by solving a problem that's hiding in plain sight.
And that hidden problem is what the proposal calls the Midterm Housing Gap. See, the idea is that there's this entire group of customers out there whose needs just aren't being met by any of the current options on the market.
So who are we talking about here? We're talking about specialized pros. Think about it. Visiting engineers who are on site for a project at the Ford plant, or maybe corporate trainers and safety inspectors on a months-long assignment. These folks need a place to stay for, say, 3 to 9 months. Way too long for a hotel, but way too short for a normal apartment lease.
And this slide just lays out their dilemma perfectly. On one side, you've got hotels. Staying there for months is crazy expensive, and let's be honest, it doesn't feel like home. But on the other side, you have 12-month leases. They're totally inflexible, and who wants to go through the hassle of credit checks and setting up utilities for a temporary stay? Nobody.
And just to put a number on it, a traditional hotel stay could easily run a company something like $3,600 a month for one employee. You can see how that cost becomes a massive pain point when you start talking about multiple projects and multiple people.
So, what's the big idea? The proposal introduces a new concept: rebranding and repositioning the hotel into the executive lodge. Now, this isn't about knocking the building down and starting over. No way. This is all about a smart, strategic pivot to a whole new way of operating.
And the core concept here is something called adaptive reuse. The key takeaway is that this is about an operational shift. It's about leveraging the building and the amenities you already have, not about a massive, expensive renovation. It's really about working smarter, not harder.
The proposed executive efficiency pivot really breaks down into 2 main steps. First, you make some targeted upgrades inside the rooms. And second, you rethink how you use the hotel's common spaces. So let's look at what would happen to the rooms. Inside the units, the plan calls for smart, focused upgrades. We're not talking about gold-plated faucets here. We're talking about swapping out a dinky desk for a real ergonomic workstation, installing enterprise-grade Wi-Fi so an engineer can actually send large files, putting in a decent coffee maker and a bigger fridge. These are small changes that make a huge difference when you're living somewhere for months.
Now this is where it gets really clever, because it's all about repositioning what's already there. The idea is to turn that standard breakfast area into a cool, modern co-working lounge. And then you heavily market the stuff you already have: the pool, the gym, the 24-hour front desk. These are amenities that give you a massive leg up on an Airbnb or a regular apartment, which have none of this.
Okay, of course, the million-dollar question, or maybe the multi-million-dollar question, is does this actually make financial sense? Well, the source material lays out some pretty compelling napkin math, giving us a projection of how this pivot could totally transform the hotel's bottom line.
So let's look at this tale of 2 models: the current traditional hotel operation versus the proposed corporate housing model of the executive lodge. The difference is, well, it's pretty stark.
First up, occupancy. A typical hotel in this market might average around 60% occupancy year-round, but by shifting to these long-term corporate contracts, the projection suggests the property could hit a stabilized occupancy of a staggering 90%. That's a huge jump in consistency and predictable revenue. And here's a massive operational win. Traditional hotels pay a fortune, like 15 to 20% of their revenue, to online travel agencies like Booking.com or Expedia. By getting direct contracts with corporations, that cost is projected to just plummet to less than 2%. That is money that goes straight back into the business. This table really pulls it all together.
And check out the rate strategy. This is interesting. The nightly rate actually drops from $90 to $65. But, and this is key, because your occupancy is projected to be so much higher and more stable at a flat $2,000 a month, and your costs for things like daily housekeeping and those OTA commissions get slashed, the overall financial health of the place is forecast to be way, way stronger.
So when you look at all this, the proposal really positions this model as a Goldilocks solution. A concept that's designed to be just right for this very specific, very valuable customer base that's just been completely ignored.
And this quote from the source just nails it. It perfectly captures the core idea of the whole proposal. It's not a cheap motel, and it's not some restrictive apartment lease. It hits that perfect sweet spot right in the middle for the midterm professional.
So when you boil it all down, here's the bottom line. The competitive advantage this model could create is huge. It's cheaper for the companies, it's way more flexible for their employees, it offers better amenities like a pool and a gym, and it completely gets rid of the friction of a traditional rental. That is a seriously powerful combination. And that really brings us to our final thought. Look, this explainer was about a proposal for one specific hotel in Ohio. But the real question is, how many other hotels just like it are out there? Sitting in industrial hubs, near major project sites, just sitting on this exact same hidden potential. This kind of adaptive reuse strategy could literally be a blueprint for unlocking a ton of value in commercial real estate all across the country. What do you think?